Welcome back. This is SeeWing Yee from the Year Real Estate Network, and today I'm going to talk about the housing crash lies. Lies, lies, and more lies. And let me show you the real data, not from the doom and gloom housing crash YouTubers. All right, so with that in mind, let me share my screen. Here it is. All right, investor reality checked. 0.26%, which is a fraction of 1%. Okay, you have to understand where is the decimal is located. Of US homes had a foreclosure filing in 2025. It's all about the context. Headlines, headlines does not equal the truth. Why the foreclosure data does not mean what you think it means. All right, here are the true data. Okay, you have to read, you have to digest. Okay, from the deadline, from the headlines. So, according to the foreclosure surge, 57% housing crisis fear. Experts warn of repeat 2008 collapse as foreclosure activity spikes nationwide. Sounds terrifying, right? Before you panic, let's look at the full picture. What is true is, yes, 367,460 foreclosure filings in 2025, up 14% from 2024 per Adam data. What they don't tell you still is 25% lower than 2019. Only 0.26% of US homes are affected versus 0.36% in 2019 versus a whopping 2.23% at the 2010 peak during the global financial crisis. So if you compare the foreclosure rate, as you can see, here are the numbers. The raw numbers does not lie. Okay, read below beyond the headlines. Furthermore, you need to have stress in order to have foreclosures. 71.6% home of US real estate have enormous equity buffers. This is the homeowners equity. Equity buffers are massive. Unlike 2008, most homeowners are not underwater. High equity means fewer distressed sales, even under payment stress. The lock-in effect, right? The lock-in effect. People are not selling because they're sitting very, very comfortable on their mortgages. In fact, 40%, 40% of US homeowners does not even have a mortgage. Okay? 80% of US homeowners have mortgage rate fixed debt, 30-year fixed debt, less than 6%. 25% of homeowners have mortgage rate less than 4%. Okay? If there are no stress in the market, then there's no foreclosures. All right? So that is the current data. All right, let's continue. Furthermore, lending standards are tighter. Post-2010 regulations eliminated no-doc and subprime loans. Today's borrowers are far more qualified. This is a normalization. Foreclosure activities was artificially suppressed by COVID moratoriums. We are returning to 2019 baseline, not crashing. Okay, the bottom line is for investors, foreclosures are up. This is a headline. Context is reality. Okay, once again, here's a quick stat. 0.26% home sale foreclosure in 2025. We're talking 1/4 of a percentage of 1%, way, way below 1% of US homeowners. 25% below 2019 levels, and we have massive multi-trillion dollar of equity in US homes, home equity. This is not a broken housing market. It is a rebalancing one. Smart investors look past the headline to the data. And the data says the market is normalizing, not collapsing. So the recap is we all need to stop listening to the negative news media, or those doom porn, all the doom porn YouTube videos out there, okay? All the YouTubers out there who are scaring the crap out of your pants by reporting housing crash for the past 5, 6, 7 years. We need to avoid those negative doom porn YouTube influencers out there, okay? Look at the real data. All right, so hopefully this video helps. Thank you so much. Please like and subscribe to my YouTube channel, and also subscribe to my email, my free member. If you want to be a free member of our real estate investment organization, our network, put your email on my website newsletter, so you receive a free newsletters coming to your email inbox on a weekly basis, so you can learn more about real estate investing, real estate economy, real estate market data, and etc. Thank you so much for attending. This is SeeWing Yee from the Yee Real Estate Network. Have a nice day. See you next time. Bye-bye.